All right, guys, we got to talk about the price of gold that has been absolutely surging the last couple of weeks here. And I'm going to give you my perspective as somebody who was buying gold way back in 2017. So I am no stranger to the gold trade, the inflation trade, etc., etc. I have been in this trade since 2017. Way back then, I was buying gold bullion, I was buying silver bullion, and I was also buying mining stocks. That's when I first started dipping my toe into this trade. So I was extremely early. And to be honest, like right now, I'm looking at all of the euphoria in the gold market, and I'm kind of laughing at these guys because they truly do look like exit liquidity, right? So if you just look at Costco, for example, if you've been hanging around X at all, there's all these stories about how people are just like trying to load up their shopping carts with gold bars from Costco, all these crazy stories about people lining up at gold shops to get gold because the price is going up. This looks very toppish to me. It looks like retail is fully embracing the idea at this moment. And when that occurs, when a trade gets to the point where just the average Joe is rushing out to buy something, when the average Joe is like, I got to go to Costco and buy gold, that is the exit liquidity right before your eyes in real time. So back in 2017, nobody was buying gold from Costco. Nobody was rushing to their local gold dealer to get some bullion because the price is going up, right? That was when smart money was accumulating. And now that the trade has reached such mainstream saturation, it's what is the upside, right? Because everyone's like, well, the government's printing money. They're still printing money. Rates are coming down. Um, real interest rates are coming down now because inflation is still relatively elevated, but now we're getting rate cuts. You have M2 money supply blowing up. So they're like, oh, there's, so much room left for gold to run. But the problem is that's not how financial markets work. The reality is if all of that news is out, it's priced in, right? The market is always forward looking. So none of this news is a mystery. Everybody knows about it. And the fact that just your average Joe knows about it, your Uber driver knows about it, that is trade saturation. You're not going to make any money in this trade. Could gold go higher? Yes. Could we get a full blown um, currency crisis? I'm sure, of course, but unlikely at this point. And again, as I said, gold is going parabolic. It has been going parabolic for quite some time now, but the biggest part of this parabola has been over the last month. But it's reached mainstream to the point where it's a saturated trade. It's oversaturated. You're really probably not going to make a lot of money here because you know the fact that gold is surging right now, does that mean that gold is predicting something? Or does that mean that the prediction itself is just reaching critical mass, right? So, in regards to fear within the economy, sure, that can be reflected in the gold price. So, is it gold going up because that fear is coming into fruition? Or is the price up because people are now aware of that fear? There's a difference there. And I think that there's an inverse correlation between the price of gold and the economy, right? So the more that gold rallies, the more likely you are to an economic bottom, not an economic top, right? So if you look at, 2012 or 2011, back when gold went parabolic, this was like the last big top in gold, right? This was gold's last big run from like 2001 to 2011. You had a 10-year bull market here. And 2011 was kind of that blow off top. And and you could say the same thing. You could have been like, at this point in time, you could have been like, oh, what's the gold market predicting? Why is gold surging so much? Is it because the economy is about to take a tumble? Well, no, that was not the case at all. The economy did extremely well throughout here. This top in gold actually kind of marked the bottom of the fear within the economy after the financial crisis, right? So after the financial crisis in '08, there was a lot of lingering fear surrounding the economy, right? There were people worried about a double dip recession. There were people worried about inflation. So people bid up the price of gold because of those fears. But then those fears did not come into fruition, and that kind of marked the bottom of the economy and the top for gold. Now, of course, you could say the bottom of the economy was technically like 2009, but not when it comes to sentiment. Um, about 2011-ish, that's when people were no longer bearish on the economy. That's when the consumer really started feeling good again. That's when people started spending. That's when the stock market really started doing well. So this top kind of marked the end of the fears surrounding the economy. So it was the bottom for the economy in a sentiment sense. And I think the same thing is happening now, right? This is marking the end of the fear within the economy. So like these bearish, it's essentially the bearish arguments reaching their critical mass in the same way that it did in 2011, right? And when the price of gold is surging, you are more likely to be at an economic bottom than you are a top. Okay, it's that simple. So during this stage here, gold went on a tear for a decade. Guess how long gold has been running right now? A decade. That tends to be the theme when it comes to gold bull markets. They last about a decade. Now, gold has consistently done well over the ultra long term, but it tends to have these 10-year cycles. Okay. And as I said earlier, I was buying gold in 2017 when nobody was watching. Nobody was talking about gold. Nobody's talking about inflation, monetary debasement, any of these things. Nobody was talking about it. That was the time to buy gold. The time to buy gold is not now when literally everybody's buying. When your Uber driver's talking about buying, when your barber's talking about buying, when people are literally going to Costco and trying to load up their shopping carts with gold, that is the top, right? That is the top, not the bottom. Could gold go a little higher from here? Sure. But this idea of like, we're going to have a currency crisis, it's just not, I just don't see it. I really don't see it because this whole idea of a currency crisis, I mean, we can just take a look at the dollar here, for example. I mean, if the market was predicting a currency crisis, why would the dollar be doing decent right now? Like the dollar really hasn't gone down, right? The dollar has actually been in an uptrend since 2008, practically. Okay. So it's just trading in its normal little range here, right? So if we were about to get a currency crisis, people would be shorting the dollar like crazy right now, and that's not happening. Okay. So the dollar does not support that thesis. So what's going on here? It's mostly a momentum trade. That's what it is right now. Gold just kind of became a momentum trade because there's not a lot of reasons to be super risk on in the market right now. So what happened was people are like, okay, well, I don't want to be risk on right now because of the government shutdown, because of tariffs lingering, etc. Okay, so let's buy gold. And now they're creating all of these narratives to continue to pump gold. But the people who are eating up these narratives are just the average Joe investor who isn't that distinguished when it comes to finance, let's say. And they're the ones who are buying this up. Okay. Gold is so much closer to a top than it is a bottom. And back in 2017, back through here is when you wanted to be buying. Now it just doesn't make any sense. Now we can also take a look at some of these mining stocks. For example, here's like a small cap mining stock, Orla Mining. This is another one. Okay. So, from the if we look at from the absolute bear, from the bear market lows, we're up 10x on this. We're up 1,000% on this particular mining stock since the bear market lows. Okay. Now, when you see mining stocks up 10x, that is not when you buy them. Okay. You need to be selling hard right now if you are in any of these trades, right? This is again another top signal because this is a small cap mining stock. or at least it was, but now it's getting a little bit bigger because it's so pumped up. Um, Another thing I'm seeing is back when I was buying these mining stocks like Newmont and Barrick, they were trading below book value, right? They were trading below book value. And now these same companies are trading at 2x or 2.5x book value. So again, valuations are high. Um, and this is exactly what you see during kind of the late stages of a precious market bull market. You see these small cap mining stocks going parabolic. Even since, yeah, so even if we look at from the past year, just from the past year, we're up 200% on this, right? That's not a normal move. And it's not a sustainable move either. We look at the price of silver. Again, silver is surging. You can ignore these arrows. Um, and again, silver tends to move during the last stage of the precious market bull market, precious metal bull market. So gold moves first and then silver moves. So again, silver had a massive move in 2011 when everybody was fearful about the economy. Those fears did not come into fruition. So the price sold off aggressively. So when gold and silver are peaking, when they are spiking, when they are going euphoric, it is because the fear regarding the economy has hit its critical mass, right? And even if those fears go on to be true, it's all still priced in. It's all priced in, right? That's the fact. That is the fact. So even if the worst case scenario happens, it's already priced in. And historically, the worst case does not happen and the price goes down. So, I mean, you can just look at this article here, like Costco tightens gold bar policy following high demand. It's like high demand. Like who's shopping at Costco? Is this where all of your savvy investors go to buy food? They go to Costco, right? All these very prudent investors are going to Costco to pick up their gold bars when getting their groceries. And I know Costco is not where savvy or prudent um, investors go to buy their groceries. I'm sorry to tell you. This is just where average people go and they're buying gold because it's all over the news and they think the economy is going to collapse. But in reality, this probably represents an economic bottom, not an economic top. So I just think that if you're in this trade, you are probably too late, especially if you're getting into it now. You're probably too late. And even if you do make money, you're not going to make a lot of money. The downside is so much higher than the upside right now. I don't think we're going to have a financial crisis. I don't think we're going to have a currency crisis. I think we're actually in a recession, and I think we're in sort of a stealth recession right now. And I think this parabola in the price of gold right now represents the bottom, the sort of the bottom surrounding fear when it comes to sort of the stealth recession that we are in right now. I think there are so many positive catalysts for the economy going forward, for stocks going forward, that I think that the next move is probably much higher in the stock market than us going into some sort of nasty recession, right? I think we are far, far closer to a bottom in terms of economic sentiment, in terms of the economy, consumer sentiment, right? All of these, traditional numbers to gauge the health of the economy. I think inflation is going to come down. I think interest rates are going to come down. I think GDP is going to go up. I think we're going to get a trade deal with China, right? I think we're going into an expansion phase, not a contraction phase. So I think we have been in a recession, even though it's not officially called. That's why I call it a stealth recession. And I think this parabolic move marks the bottom of the stealth recession. It's the capitulation event of the recession itself. And I think going forward, we're going to see aggressive moves to the upside. And it's going to leave a lot of people sidelined, and they're going to be trying to chase these gains. All right, so those are my thoughts on gold. Thank you guys for watching.